Hey, this is Craig with TQ Financial Services. I hope you guys are doing great. I'm actually sitting in Patrick's office, and Patrick says, you guys, I'm going to try to show you the size of this screen. Right? I got a double screen. This probably didn't do it justice. I got a double screen, right? I got to talk to him about a raise. But his thing is the size of the desk. I don't even understand it. That's why he probably doesn't allow us in here. But anyway, we're doing part 3 of our series, Growing Your Business with Taxes. I figured I would come into the boss's office, try to get myself a little bit comfy. If you guys haven't seen some of our tax tips by now, and I know on a couple of them I got kicked off of a couch that was very comfortable to me because some people were clamoring and complaining about people, but whatever, you guys will see that. Either way, the purpose of this video is to try to give you guys a part 3, like we said, of the series Growing Your Business with Taxes. We're giving you reviews of different things that you can do in your business in order to either keep more money in your pocket or earn more money. Part 1 we did record keeping, very important. Part 2 we talked about either increasing expenses or reducing income. I know that was like weird to a lot of people, but hopefully you guys got to do it. If you didn't, go ahead and look back in our archives and see that video. It's very, very important. And today we are going to talk about proper business structure. We see this all the time. We see posts that people immediately throw on CCorp. If you're doing a business, it has to be number 1. And maybe, not really. Depends on what's going on. So we're going to try to go through sole proprietorships, LLCs, CCorps, because they're often ignored, I don't know why, and S-Corps, and we'll see which one fits you. And again, the purpose of the business, or the purpose of the video, excuse me, is to give you guys more information on ways to be profitable or how the business structure affects your money. So yes, we might talk a little bit about the structure and pros and cons. I guess I'll have to do that, but again, the focus is the money portion. We're not really caring about, certain other intricacies that might go along with them. So without further ado, let's get cracking. Sole proprietorship. What is it? Sole proprietorship is me. I decide to open up a business and I don't have to do any paperwork. I don't have to do any filing of any kind. I just have to start trying to make money. So it's a great pro. It's fantastic. It's cheap. Why not do it? And anybody can be considered a sole proprietor as long as you're honestly trying to make some bread. The con of a sole proprietorship would be that you have no protection against personal liability. So if your business gets attacked, that means debtors or creditors, etc., can actually come after you. How does that help you as far as money? Well, again, if the purpose of making money or a business is to make money, and this one costs you actually hardly no money to actually establish a business, you're already starting ahead of the curve. The other factor would be that when you file, you're using a Schedule C, right, which is not a 1120S, S Corp, or 1120, etc. This is a simpler, cheaper tax return to do. Again, keeping more money in your pocket, and you still have, if you read our book, the biggest book of small business deductions, a lot of deductions that can be applied, yeah, shameless plug, towards the things that you're doing in your business, much like any other structure, the LLC, the S Corp, C Corp, etc. So it's a great tool, or it's a great unit to use if money is an issue. Again, our biggest problem with it is personal protection. You're not protected, again, if something were to happen. The other thing that you might want to consider is the scrutiny of the IRS, right? Because the IRS takes money. Everybody knows that. Oh my God, have you been garnished? Do you own 10,000 or more? Everybody's seen one of those commercials. Again, sole proprietors have to understand that you're more scrutinized as being or considered a hobby than probably any other business structure, right? Again, yes, this IRS, if you looked at one of our other tax tips, we talked about are you a business or are you a hobby, and we broke down the 9 things that the IRS looks for when they're trying to consider that, are you a business or are you a hobby? What makes you count as an actual business? Profitability, of course, is important, in time, etc. But again, the reason we brought this up for our sole proprietors is at the end of the day, when you're doing your tax return, you're doing X, Y, Z, are you structuring your business correctly to where the IRS is going to say, well, if they're making money and they're doing well, why in the world would they not protect themselves? Because you just have to think like a human being. At some point, it has to make sense for you to protect the thing that you're working for. So again, this is something you might want to think about, because if you're like most businesses or most people who are entrepreneurial minded and we're just hustling trying to make money, record keeping and trying to make sure everything is perfectly aligned is not, the number one priority. And sometimes we either rely on ourselves to a fault to get things correctly done in our books, or we hire someone not knowing their understanding or expertise, and that ends up becoming costly money-wise, right? So that's one of the things to think about. Number 2 on the list is going to be an LLC. LLC means pretty much you register the business. We're in Florida, so you do SunBiz. You say, hey, I got my business registered. Hopefully you go the next step and get your EIN from the IRS. But at the end of the day, this structure, which is one of the most popular ones, allows you to pay a minimal fee, right? It's not very expensive to set up the business structure, and it gives you that asset protection we talked about, which is great, okay? If they come after you, they say, hey, we're gonna go after your business stuff, your personal is pretty much covered, again, unless you are at fault for, I should say malpractice, not the word, but you're purposely doing something, then all bets are off for all structures. Again, the other benefits financially, because we're worried about money when it comes to the tax setup for an LLC is, yes, you have the same thing as sole proprietorship, where you are actually doing your tax return on a Schedule C, which gives you all the deductions we talked about, or we did talk about in the book. Again, no plugs. But again, you have all those wonderful things or opportunities available to you, as well as you're more favorable towards certain business people. So if they look at your business, and if I don't know if you guys ever try to get into certain events or book yourself as a business to do things, though, one of the first things they ask you is, are you registered? Can we find you on SunBiz? Sole proprietors, you're not on SunBiz. LLC, you are, so again, at least in Florida, so it makes you more established. And the other benefit of them financially is that you have more freedom. You can choose to be elected as an S Corp or C Corp or partnership, and those come with a gauntlet of additional deductions that can be done, as well as ways that you can improve yourself. The downside, again, to an LLC financially is you can't salary yourself. Because you're not considered as an employee like on an S Corp, you would be. You say, hey, I am the employee of my own business. LLC, you can't do that. So wages are gone. So we're going to put up a clip that shows you, and we're going to talk about, the salary ranges as a sole proprietorship, or LLC versus a S Corp, and you'll notice that self-employment tax is the other big oh no. So as an LLC, you guys, when you file your taxes, and the same thing for sole proprietorships, you guys have to pay self-employment tax. That's at a rate of like 15.3, 15.4, depending, percent. Now, that means that you're putting money into Social Security and Medicare, which is what you have to do. Again, when we get into the S Corp, we'll explain the difference, but the key point would be that you're paying a lot more taxes, right? So at the end of the day, that's the downside of an LLC financially, which is why a lot of people say convert that business into S Corp. Truth, if you're making money. If not, no harm, no foul. C Corp, number 3. Why in the world do people just jump over C Corps? Because they are not that wonderful a lot of the times. But we will tell you this. A C Corp gives you the same, hey, we're going to protect your assets, etc. But the benefit and the thing that people miss with a C Corporation is it has one of the lowest tax rates available. I think they do at 21%. And I know that sounds like, what? But think about it. If your business is earning a significant amount of money, and you're capped at 21, not 36 or 39%, you're doing pretty well. You could utilize that to actually benefit all the way around. Now, people would say, well, if that's the case, why in the world aren't people doing it all the time? The reason is because the dividends, or the money you pay out on the C Corp, that's what it would be if you pay a dividend, ends up getting taxed on your personal side, so you end up getting double taxation. But if you salary yourself, which you can do, you can offset some of that taxation. So that's something you might want to think about, or talk to your tax preparer or advisor, whoever, about, to see if you are in a position where a C Corporation and their lower taxation can actually help you out. Now, last but not least is the favorite of every, seems like CPA or tax preparer or whatever. They say, hey, you started a business, set it up as an S Corporation. Now, we're going to frown on that. We're frowning on it because if your business isn't even making any money, you're already losing money. Because none of these people are going to say, oh, wow, you didn't make any money this year. You know what we're going to do? We're going to prepare that sheet for you, and we're going to do that 1120S for you for free. Don't even worry about it. It's more expenses to prepare an LLC, or excuse me, an 1120S than it is a Schedule C. And everybody knows that, right? It's industry standard. You're just going to have to pay for that. So in our eyes, you're automatically losing money. You can convert from an LLC to an S Corp almost any time. So you might as well pay attention to see how your profitability goes before you listen to everyone spitting out the fact that you should immediately go to an S Corp. So you're losing money if your business doesn't do well because you're just spending money to prepare taxes anyway. That's our side of it financially. S Corp, pros, same thing, asset, liability, blah, blah, blah. They block you against your personal. Wonderful. The other part of it is that you can salary yourself. So again, we're going to bring that chart back up, and you'll notice again on the same chart with the 75K that you can see that an S Corp actually pays less taxes because they don't have to deal with the self-employment taxes that an LLC or a sole proprietorship would deal with. So that's why it's a benefit, because everyone says double taxation, but that's what they mean by that. You're actually salarying yourself, which you're paying taxes on. Yes, it is what it is, but you're avoiding the self-employment tax, which ends up reducing the amount of money that you spend. So your business ends up earning or keeping more money. So again, you have four choices: sole proprietorship, LLC, C Corp, or S Corporation. Any of these choices honestly are good. It all depends on where your business is. The only one we would probably stay away from on the personal side would be a sole proprietorship, only because of liability. But financially, you can benefit from almost any of those structures. And so to help you guys understand on the S Corporation, why would I not even convert? Well, because if your LLC makes $20,000 for the year, your expenses are $21,000. What was the purpose of filing an 1120S? You have a loss. A loss is a loss. The loss is going to carry through either way, right? So you guys think about how you want to structure your business. Again, make sure, in our opinion, that you do register the business. If you have questions about this or any other topic, please give us a call, 800-413-1456. As always, follow us on all our social media platforms. We'll be back again with another part 4, I guess that would be, to this series to help you guys find ways to earn more and put more money back in your pocket. As always, we say it on every video. We're going to say it for this whole year. Refer, refer, refer. Support those who support you. You guys make sure you have a blessed and wonderful day. And don't forget to make it count.